Welcome back, friends. Namaste, bhai or beno, suprabhatam. There has been some change in the revision of enhanced surveillance measure or ESM for the companies below 1,000 crores market capitalization in India. And this could have an impact on small cap companies. Many are rejoicing that this will be extremely favorable. Let me in this short video explain to you what I believe can happen. Now, first let us understand what is going on. To keep a closer watch on the small cap stocks and protect the investors, NSE has updated its enhanced surveillance measure or the ESM framework, which kicks in from July 28, 2025. Okay, so that means it's applicable from tomorrow. The new rules apply to companies with a market capitalization below 1,000 crores and focus on tightening the criteria for tracking the unusual price movements. All right. Now, what will be the shortlisting criteria for ESM stage 1? A stock will be shortlisted if either of the following is met. Okay. One is the high-low price variation over 3, 6, 12 months, or we have the close-to-close price variation. All right. Now, high to low price variation is variation exceeds one standard deviation of peers with market capitalization less than 1,000 crores, and absolute variation more than 75% over 3 months, 100% over 6 months, and 150% over 12 months. And also positive close to close price change in the last 3 months. The second criteria is close to close price variation over 3, 6, and 12 months. So variation exceeds one standard deviation. And second is absolute change more than 50% over 3 months, 75% over 6 months, and 100% over 12 months. So this is quite a tight criterion, but stocks with derivatives are exempt. And secondly, stage-wise surveillance actions, right? Stage 1, we have 100% margin from T plus 2, trade for trade settlement with price band of 5% or 2% if it was already there. Stocks which are already in a stage 1 will be moved to stage 2 if they meet the following criterion. Note this carefully for those who follow these small cap, mid cap stocks carefully. For them, it's very, very important. Either the stock's close to close price rises by 15% or more over any 5 consecutive trading days, or the price increases by 30% or more in a month. Okay, and the stock's PE ratio is either 0 or more than twice the PE of the National Nifty index. Okay, then the trade will be shifted to trade for trade with a 2% price band, 100% margin will be required, and trading allowed only through periodic call auction with a plus or minus 2% price band every day. All this has turned out to be very, very onerous. Now, stocks which are under the ESM framework will be reviewed weekly for possible downgrade to a lower stage or exit. Stock can exit, however, the ESM framework after 90 days, provided it no longer meets the entry criteria. However, if the stock is in stage 2, then it must stay there for at least 1 month. After 1 month, if its monthly price gain is less than 15%, it can be downgraded to stage 1 during the weekly review. And finally, and the most important, after completing 90 days in the ESM framework and meeting the above conditions, the stock becomes eligible to exit the ESM framework. Now, as we can see, the entry criteria for entry into ESM 2, where the stock has to compulsorily remain for 1 month, that was allowing a price fluctuation of 8% before, if you are in ESM 2, to be able to exit. Now that has been increased to 15%. So all that I'm trying to say is that a stock which is already placed under the stage 1 of the ESM framework will be moved to stage 2 if it sees a 15% or more price gain over 5 consecutive trading days, or a 30% or more gain over a one-on-one period. But the very, very important thing which I would like you to know is that once you are in ESM 2, you cannot move more than 8%. Otherwise, you will not be able to exit it. That has been changed to 15%. So all this is quite good, and the new ESM rules therefore will make it easier for a higher price fluctuation for the stocks which are in ESM2 framework. And the reason I'm saying all this is very important, because you can come to know where the problem lies and how much fluctuation in the price can be allowed. By the way, we also use all these criteria to when we tell you where the movements can take place in particular stocks. The problem that arises is that for ESM1, the 90 days period, right? It's, as far as I can see, unless there is some further clarification that comes in, remains the same 90 days. Now that's a long period of time. Okay. So yes, some stocks may benefit, because even in ESM2 you can rise, but the amount of variation that can happen will be limited, and you will still be under ESM framework for 90 days, which I think is quite onerous. So friends, as far as overall impact, yes, some small cap stocks will benefit in this. The generation, there will be a boost in the confidence levels. What will not work is that there is not only these ESM rules, but there are many other things which are working around the world, the US, India tariff, and many other things which are still not out in the open. There's an uncertainty pertaining to that. There are uncertainties pertaining to other things, that the August 1 deadline for Trump administration is coming near, where many tariffs have to be finally decided. And he has not been able to culminate with many countries. There has been a good successful, like Canada, Mexico, Brazil, all these are still remaining. With the European Union also, although President Trump is right now in Scotland and they're trying to work a deal with the EU as well. So all these things will act as headwinds for the market. The relaxation in the ESM criteria will be helpful to a marginal extent, because the main thing is that the ESM framework itself continues to be of 90 days duration, which in my opinion is quite onerous. I hope that over a period of time, but then don't forget, I know Tuhin Pandeji very well, SEBI chairman, and I think whatever they are doing is in the interest of the small investors. So it looks onerous to you, but eventually it is for the safeguarding the interests of the small and the marginal investor. So let's have full faith in SEBI and in Tuhin Pandeji. And yes, to get to know more about where we are headed from here, the markets. Therefore, in my opinion, this will not lead to a huge rally in the markets by themselves. Small cap index can benefit, but overall you will find that the markets will be limited by the global factors. And to get to know where we are headed 10 to 12 days from now, and whatever best judgment on the basis of the political, the economic, geopolitical factors, the best judgment we'll be able to give you in Premium Plus. Gives you 10 to 12 days predictions in advance and good multi-bagger prospects. Number to get in touch, you can WhatsApp us on 9820861044. Namaste, Jai Hind, Jai Bharat.